Welcome to the world of accountancy. Hello, my dear students. Today I am going to take a new chapter, Accounting Equation. So, shall we start? What do you mean by accounting equation? An accounting equation is a formula of accounting which shows that the assets of a business are always equal to the total of capital and liabilities. I am repeating, an accounting equation is a formula of accounting which shows that the assets of a business are always equal to the total of capital and liabilities. Means assets is equal to liabilities plus capital. I hope it is clear to you. Now, performer of accounting equation. Column 1 serial number, column 2 transactions, column 3 assets is equal to liabilities plus capital. That is our formula of accounting equation. Assets is equal to liabilities plus capital. Now, I am giving some examples of transactions, assets and liabilities. First, examples of transactions. Started business with cash, sold goods for cash, purchased goods for cash, purchased goods on credit, and many more. Now, I am giving some examples of assets. Cash, stock, accrued income, bills receivables, furniture, land and building, bank, prepaid expenses, debtors. Now some examples of liabilities. Creditors, outstanding expenses, bills payable, unearned income and many more. Now we will see effect of transactions on accounting equation. Let us take an example. Suppose Rohan starts a new business. Now, transaction 1. Rohan started business with rupees 1 lakh. Rohan started business with rupees 1 lakh means it has its effect on cash as well as capital. So, here is the recording of transaction that cash has been increased by 1 lakh and similarly on the right hand side capital with rupees 1 lakh. Next transaction, Rohan purchased furniture for cash. It means cash is reduced by rupees 5,000 but a new asset that is furniture of the same amount has been acquired. So here is the result. Cash is decreased by 5,000 and furniture increased by 5,000 and the new equation becomes 95,000 plus 5,000 is equal to 1 lakh. Next, Rohan purchased goods for cash. It means the balance of cash is reduced and another asset, that is goods, has come into existence, leaving the total amount of assets unchanged. Now, here is a treatment. Minus 20,000 from cash and stock has been increased with 20,000. Now, new equation is 75,000 plus 5,000 plus 20,000 means total of left hand side is 1 lakh and total of right hand side is 1 lakh. Next transaction. Rohan purchased goods on credit. Now, when the goods purchased on credit, then liability will increase and goods increased by 10,000. Here is the treatment. This transaction will increase the goods on the asset side and will create a liability in the form of creditors. Now, Rohan sold goods for cash. Here is the treatment. It means cash is increased by rupees 10,000 and stock is reduced by 10,000. Next transaction. Rohan sold goods on credit. This transaction will decrease the goods, but there is a new asset, that is debtors, which has been increased. This transaction will give rise to a new asset in the form of debtors and goods will be reduced by rupees 5,000. I hope these transactions are clear to you. Next, goods costing rupees 2,000 sold on credit for rupees 5,000. This means it gives rise to a new asset in the form of debtors to the extent of rupees 5,000, but goods will be reduced only by 2,000. The net increase is in assets. Rupees 3,000 is the amount of profit which will be added to the capital. Now, see the treatment. Minus 2,000 from stock plus 5,000 in debtors and the profit amount is added in capital with rupees 3,000. Next transaction. Goods costing rupees 2,000 sold for rupees 5,000 for cash. Here is the treatment. This transaction will give rise to increase in cash by rupees 5,000, but goods will be reduced only by 2,000. The net increase in the assets, rupees 3,000, is the amount of profit which will be added to the capital. Now, it's turn for expenses. Paid rent rupees 10,000. Cash and capital will be reduced by rupees 10,000 because we have paid money out of the business. Yes, the effect of this transaction is it reduces cash, and secondly, as the rent is an expense, it results in a loss which decreases the capital. Next transaction, received rent rupees 5,000. The effect of this transaction is it increases cash and rent is an income. It results in a income which increases the capital. I hope these transactions are clear to you. Now, withdraw cash for personal use means drawings. Similar treatment, there is no other column for drawings. Cash and capital will be reduced by rupees 10,000. The effect of this transaction is that cash is reduced by 10,000 and capital is also reduced by 10,000. We will see further transactions in the next video. I hope till then you will revise these accounting equation. Thank you. Have a nice day.